Well, new data from the Labor Department suggests inflation's dropped over the last few months. That's a great thing, obviously, for consumers, for all of us, right ahead of the holiday season, but it's still a far cry from where we've been over the last few decades. Neil Fisher has more for us.
Tonight, inflation has loosened its grip on consumers, but is still digging into the pockets of many Americans.
The average consumer on the economy, the things they're buying is about 7.5% higher than it would have cost to buy those same things a year ago.
The Labor Department reporting that inflation is at 7.7%, which provides a breath of fresh air for consumers over the last few months. But as Case Western Reserve University economics professor Jonathan Ernest told me, the number is relatively high compared to what Americans have seen.
Relative to the past few months, the significance is really that the number is coming down a bit, and we hope to see it continue sort of in that same direction. Relative to the past few decades, this number is pretty high.
To drop inflation, red flags start to appear, as there are concerns about how to go about helping consumers.
On its own, it's not the falling inflation that really causes problems. It's how we get there. So in order to get those inflation levels to come down, we increase interest rates. It's more expensive for businesses to borrow. People start to realize that, hey, maybe I should keep a few of these dollars in my pocket.
Ernest tells me now more than ever, it's important for consumers to track their monthly spending.
They shouldn't just kind of go on autopilot and keep spending throughout the month and then get to a week before the end of the month and say, wait, where did all of my income for this month go?
Consumers should expect inflation to keep changing rapidly because it's near 8%. Experts say when inflation is around 2%, it's easy to estimate that it'll still be 2% the next month. Right now, there's a lot of uncertainty.